If you'd have bought one Bitcoin in April 2013, it would have cost you $135.30. That one Bitcoin would be worth $38,232.18 on the 30th of January 2022. And now, at the time that I'm recording this video, Bitcoin is $42,745.93. Bitcoin and the other cryptocurrencies that have followed in its wake have allowed for many, many people to accrue the kind of wealth that hitherto had been unimaginable for them. However, cryptocurrencies are an incredibly volatile asset group. In this video, I'm going to be talking about how you can ride the highs, making money on the way up, and not lose money during the dips. Hi everybody, this is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profits. And if you've been around the cryptocurrencies for any sort of period, you will know how ridiculously volatile they can go. I think a few days last week, Bitcoin rose 9%, and it's not uncommon for it to drop by about the same amount. Now, the maxim to buy at the bottom and sell at the top works if you're a really good trader or if you're really, really lucky. But for most people, it's not an effective strategy. It's more like a dream. You can see here on this weekly chart of Bitcoin against the dollar going back to January 2017 how volatile Bitcoin has been. We've had these incredible run-ups and then these long, slow bear markets. So you would have made money here, and then the value of your holdings would have gone down, 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 down. And then you'd be making money about here. And then again, the value of your holdings would be going down, 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 down. Bitcoin's volatility is the opportunity of making money, but there's also a risk to it because you lose value when it goes down. Now, if there was a way of balancing the portfolio, that would make a difference. The trick to being wealthy is to make money and to not lose money. And how you can combine both is by diversifying your portfolio. Take a look at this chart. This chart shows the price of commodities over 2021 using the global price index of all commodities. Now, commodities are tangible goods that are often used in production. They're also traded and sold. They can include oil, gold, silver, other metals, and of course, agricultural commodities. Now, they've been on an upward trend, but you can see the line is pretty smooth. So gently going upwards, little dip here, going up here, then little dip here. Compare that with all these crinkles and wrinkles of the ups and downs of the cryptocurrency market cap. Far more volatile. So you could invest in commodities. However, there are barriers to investing in commodities. And one of the ways to highlight those barriers is when you consider the advantages that cryptocurrencies offer. So one, there's a low barrier to entry. You know, they're permissionless. I don't need anybody's permission to go and buy some Bitcoin or go and buy some Atom or CMDX or XPRT. And I don't need a lot of money. You don't have to go and buy a whole Bitcoin for $42,000. You can buy 100th of a Bitcoin or 1,000th of a Bitcoin. I can go and buy $10 worth of Atom, and I don't need anybody's permission to do so. There's also no counterparty risk with cryptocurrencies, unless, of course, I keep them on an exchange, which isn't a smart thing to do. But generally, as long as I hold the keys, it's my crypto. Now, with a bank or with traditional forms of investing, I'm entrusting a third party, another party, one, that they'll be reliable, and two, that they'll be honest and operate with integrity. That isn't always the case. Even if they are honest and reliable, counterparties, they often take a pretty sizable commission. Now, commodities do have the same advantage as cryptocurrencies in as much as they can't be printed away. You know, you can't print more Bitcoin than the algorithm allows for. You can't print more gold. You can't print more oil or more sweet corn. You can grow more, mine more. However, all of that requires significant input in terms of time and energy. So that means that they operate as pretty stable stores of value because unlike fiat currencies, they can't be printed away to worthlessness. Other advantages that cryptocurrencies have is they're easy to store. 12-seed passphrase, 24-seed passphrase, that kept securely somewhere, and that's pretty much it for most cryptocurrencies. Try storing a barrel of oil, or what's it going to take to store 10 Bitcoins worth of gold? Even if you keep it in your own house, then you've got the security risk there, or you have to go and trust a gold custodian. They're going to charge you fees. You don't know how honest they're going to be, whether they're going to sell that gold and leave you with a cash alternative. Cryptocurrencies have definite advantages over traditional forms of investment, but they have a definite disadvantage due to their volatility. What if there was a way of combining the best features of cryptocurrencies i.e. their permissionless nature, their decentralized, no counterparty risk, with the steady returns that commodities offer. So that while your cryptocurrency portfolio was going up and down like crazy, but generally up over the long term, your commodity investments would be rising steadily and slowly and holding their value. At the very least, you wouldn't be losing money when you have sudden crashes and dips like what happens with cryptos. Well, I'm going to be talking about a project that combines the best features of cryptocurrencies with the best features of commodities, principally oil, gold, and silver in the beginning, allowing ordinary retail investors like you and I that don't have access to hundreds of millions of dollars to be able to participate in the commodities market and have all the security and permissionless nature that cryptocurrencies provide. Now, the project that I'm going to be talking about aims to democratize finance, i.e. make global finance available and accessible to any and all, like even small retail investors like you and I. And it does this by combining the accessibility, the permissionless nature, and the security of the blockchain with the stability provided by commodities. And in this instance, I'm going to be talking about gold, silver, oil, although later on they'll be adding agricultural commodities. Now, the project I'm talking about is Comdex, Comdex.one. I'll have all the links in the description below, and I'm going to continue covering them. So please do subscribe, comment, like, let me know what you think. Comdex is part of the Cosmos ecosystem, so it is a project that I'm going to be visiting again and again. What Comdex are doing are building an ecosystem of decentralized applications that bridge the gap between centralized finance, i.e. banker-controlled or City of London-controlled, Wall Street-controlled financial institutions, to decentralized finance, which is permissionless, secure, and lives on the blockchain. Now, at the time of recording this video, their Comdex platform, i.e. their commodities decentralized exchange platform, is ready to launch in testnet. It may already be out on testnet by the time this video goes live. And pretty soon, once the testnet phase is over, it'll be available in mainnet. Comdex is a trading exchange for synthetic assets that represent gold, silver, and oil. Now, to be perfectly honest, the concept of a synthetic asset eluded me. I didn't quite understand it. Remember, my background is in social work. So whatever you do, you don't want to take financial advice from me. You want to check stuff out for yourself first. But anyway, what is a synthetic asset and how can they be used to trade gold, silver, and oil? And then it occurred to me that our life is full of synthetic assets and we don't even notice that they're synthetic assets. Consider this picture of Mona Lisa. The picture is not the woman itself. It's a representation, i.e. it's a derivative or a synthetic asset of the real woman that Leonardo da Vinci painted. So what a synthetic asset is a derivative, a representation of something real and tangible, or a representation of something else, but not the thing itself. So a synthetic asset of gold, oil, or silver isn't gold, oil, or silver, but merely a certificate or a representation of the underlying commodity. Now, in the traditional financial world, this might be paper certificates or even digital certificates. However, Comdex is utilizing the security of blockchain to create synthetic assets in the form of cryptocurrency tokens that are then used and traded on its Comdex exchange. Now, there are three main features to this process. The first is tokenization or minting, and that involves putting some collateral. Initially, it'll be with Atom XPRT, which is the token for the persistence blockchain, or CMDX, which is the token for Comdex. Those are then locked as collateral in order to create synthetic assets representing oil, gold, or silver. Now, at the point where the asset is created, i.e. minted, the price feed for the existing commodity comes from Band using their decentralized oracle, which then provides real-life prices. Synthetic asset tokens thus created will be known as C asset, or more specifically, if it's one that represents gold, it'll be C gold or C silver or C oil, and then they can be traded on the synthetics exchange. Now, initially, they'll be traded against UST, which is the stable coin of the Cosmos ecosystem, also known as Terra. So if you thought that gold was at a relatively low price, then you could use some UST to buy more C gold. Or if you thought that the price of oil was pretty high and was likely to go down, you could sell your C oil assets against UST. Now, unlike the financial world, you wouldn't have to deal with other agencies and counterparties like banks and brokers, nor would you need to use large sums of money, like using hundreds and millions of dollars or whatever it is that these large brokers use in order to transact with gold, silver, and oil positions. All you need is some Atom or XPRT or CMDX to be able to participate on the Comdex platform. Now, the third feature is the ability to farm or earn liquidity mining rewards. Now, what do I mean by that? Well, in a centralized exchange like Binance or Coinbase or Kraken, if I want to sell my atom, there has to be somebody on the other side who wants to buy that atom. If there's no buyers for the atom, there's no liquidity, then I'm not going to be able to sell that atom. And that's pretty much how centralized exchanges work. Comdex platform is an automated market maker, i.e. a decentralized exchange, which operates in much the same way as Uniswap or Osmosis. And how that is if I want to sell my atom, I'm not trading against somebody who's buying atom. I'm going to be buying and selling in and out of liquidity pools, i.e. these are reserves of tokens that are locked into the smart contract for the exchange that people trade in and out of. Now, where do these tokens come from? They come from token holders who are willing to lock their tokens in the smart contract in order to earn rewards for doing so. And those rewards come in the form of a share of the transaction fees that take place in the platform. So I'm currently farming Comdex on the Osmosis DEX. So I've locked some CMDX and some Osmo in the Osmosis DEX. And as people trade in the Osmosis DEX for buying and selling CMDX against Osmo, then I get a share of the transaction fees proportionate to my share of the pool. Now, the Comdex platform will work in the same way. So people can deposit their C gold or their C silver or their C oil against Terra in the smart contract for Comdex, and then they'll be rewarded a share of the transaction fees, and those rewards will be paid out in the form of CMDX. Now, one other feature of the Comdex platform that I want to mention is lending. So you'll be able to take out a loan having offered some collateral. And because this is decentralized finance, you don't need to do any KYC or need anybody's permission. You just need to be able to offer the required collateral. Now, there'll be more details of that as the project rolls out. Just to recap, you'll be able to mint C silver or C gold or C oil with prices determined by the band protocol. You'll be able to trade those C assets against UST. Those prices will be determined by the prices within the exchange itself rather than from band protocol's Oracle feed. And you'll also be able to stake CMDX, given that this is an asset that's part of the Cosmos ecosystem. Now, to track all of this, there's this incredibly beautifully well-designed and useful dashboard, which will be able to tell you how much total value is locked, how much you've got locked, how well your C assets are doing, what's the liquidity in the platform. And this operates as a non-custodial platform that keeps you up to date with how well your portfolio is doing. Now, because Comdex is using the blockchain to trade synthetic assets that represent gold, oil, and silver, it's fast, it's secure, it's permissionless, and it's accessible to all because you don't need to have a lot of money to be able to participate in this. And it will allow you to invest in gold, silver, and oil, and thus diversify your portfolio so you balance out the crazy highs and the crazy lows that are a feature of cryptocurrencies. Now, I'm looking forward to the launch of this platform. I'm looking forward to covering this project again and again and having some interviews at some point. I've already interviewed the co-founders. You can find that in the playlist. And I'd love to know what you think of this. Do you hold any CMDX? Are you looking to use their platform to invest in gold, oil, and silver? Do you have any comments or questions? Let me know below the video. And between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich signing out. All the best. Bye-bye.